Hi friends, we are starting a face-to-face offline batch in Bangalore with SS Academy. That is for CA Final Financial Reporting paper number 1. Yeah, we'll be taking exactly 2 months from 1st November to 31st December. We'll complete it. It is starting from 1st November 2022. Yes, and in Jayanagara branch of SS Academy, we have morning batch and evening batch will be at Seshadripuram SS Academy. Right, and if the student is missing because of any reasons, right, they are going to get a backup class. All right, we'll ensure that their things, they will study and complete, and from the face to face batch, the benefits out of it. We'll be completing the syllabus in time. You don't need to postpone and you don't need to compromise for your goals. See you in the class. Please share this information to your friends. That will help me and as well. Thank you. Next, for my books, that is an Ind AS made easy, our financial reporting made easy, and fast track summary book. Yes, you can order in ravikanthmiriyala.com, or you can contact the given number for the books. Right, for your doubts, clarification, please join the Telegram group Ind AS discussion group RKM. Ind AS 7 statement of cash flow. Right, it is an integral part of the financial statements. In CA final, in the last 2 attempts, consolidated cash flow statement has been asked. So it is better to have a look at it. Yeah, definitions, there are 2 major definitions. One is what is cash and the next one is what is cash equivalent. What do you mean by cash? Cash includes cash in hand plus cash at bank plus demand deposits with the bankers. Yeah, whenever the company asks for it, demands it, then you are supposed to, banker has to pay me. Right. Next one is cash equivalent. Cash equivalent, to say one asset as a cash equivalent, it has to satisfy 2 conditions. The first condition, it should be highly liquidable, short-term asset. Yeah, short-term here means 3 months. Highly liquidable, that means whenever you want, you should be able to convert into cash. Okay. And the next one, on conversion, when you are convertible into cash, you can convert into cash with insignificant risk of loss, insignificant risk of change in value. That means today I bought it for, the worth of it is equal to today 1000. Tomorrow, whenever I want to convert into cash, there should be very slight changes there acceptable. Suppose 1000 rupees, it is, I got it 1002 rupees or 1999 rupees. Such kind of small change is acceptable. Yeah, if it is subject to higher fluctuation, like suppose if I purchase equity share, yeah, today value is equal to 1000 rupees. Tomorrow, God only knows, it may become 1100 rupees, or tomorrow it may become 900 rupees. It is subject to very high fluctuation depending upon the market factors. Then investment in equity, investment in debenture, no, it is not going to be considered as cash equivalent. Okay, like, right now, if it is a fixed deposits, yeah, which if fixed deposits, if you have taken the fixed deposit with a maturity of 3 months, original maturity of 3 months, not the remaining maturity, original maturity of 3 months, then only fixed deposit will be considered as cash equivalent. Otherwise, it will be considered under loans and advance. You are supposed to keep it. Yeah, if it is more than 1 year. Yeah, if the fixed deposits original period is equal to 1 year, not more than that, and remaining is also 1 year or less than 1 year, then it is obviously non-current asset. If it is a non-current asset, but it is not part and parcel of cash and cash equivalent, because its original fixed deposit period is not 3 months. That's the reason below the cash and cash equivalent, you have to write other items of bank. You are supposed to, other than the cash and cash equivalent, you are supposed to present it. That is a requirement which is very clearly specified in the schedule 3. Right. With respect to bank overdraft, Ind AS 7 has given very clear information. That is, bank overdraft will be considered as, it is part and parcel of cash, because it is a cash management. Whenever I need money, just like that, I will withdraw the money from the banker, and whenever I get money, I will give it back. There is no fixed period of loan. But remember, this rule is applicable to the bank overdraft which is repayable on demand. Then it is not considered as loan, because, yeah, first thing, whenever you get the money, you can give it back. right? There is no fixed period exactly, right? Because it is repayable on demand. Bank may not ask, but they ask for that. That's why you have to read the terms and conditions of the bank overdraft. Okay, but when it comes to cash credit is a very clear straight away, it's a loan. Okay, loan, so it's a loan, so that's why the cash credit amount you have taken or given back, that is treated as a financing activity. And as you know, cash activities only will come in the cash flow statements, or non-cash activities will not come. But major non-cash activities, the standard says major non-cash activities should be disclosed somewhere. Okay, they should be disclosed somewhere in the sense, in the financial statement, somewhere in the notes to financial statements, you are supposed to disclose it. Like say, conversion of debentures into equity shares, yes, it is non-cash item, correct na? So you are supposed to correct na? Otherwise, in business combination, you purchased the assets and you gave the equity shares, it is also non-cash transaction. Yes, it has to be disclosed somewhere in the notes to financial statements, but not necessary to disclose it just below the, not necessary to disclose below the cash flow statement, remember. Yeah, your cash activities are going to be, as you studied in CA Inter, that is operating activities, financing activities, and investing activities. Operating activities are primary, business activities, plus and residuary also will consider. Residuary in the sense, when an activity is not financing or investing, then that is going to be classified, because it is a cash activity, it will be classified as operating activity. Investing activity means, investing activity in the sense, purchase and sale. Okay, purchase or sale of fixed assets and investments, and whatever the returns from the investment, that is interest income, dividend income, everything is going to be part of investing activity. And financing activity is, these are the cash activities where there is a change in the composition, that is your capital change. Capital in the sense, financial management capital structure is getting changed, right? So that means issue of equity share capital, preference share capital, debentures, and long term loans, any loans basically, all are going to be part and parcel of financing activity. That is taking the loan, giving the loan, that is redemption, or you can say repayment or buyback, you can call, from different aspects. Not only that, the cost of this borrowing, cost of the issue of equity share capital, that is dividend payment and interest payment, is going to be part and parcel of financing cost, right? Operating activities, as you know, there are two ways, that is direct method and indirect method. Ind AS prefers, it's not mandatory, Ind AS prefers to follow, yeah, they say you follow direct method, not indirect method. A accounting standard says indirect method is preferable, Ind AS says no, direct method is preferable. Okay, that is only encouraged, that directly you will take the, cash sales, cash received from the debtors, cash purchases, payment to the creditors, cash expenses, something like that, you will write it, minus tax payments will be separately presented, which you are aware of it. If it is indirect, then obviously, generally, what are we doing now? Yeah, here profit after tax, not actually before tax, profit after tax, because there is no specific format exactly with respect to cash flow statement, and even Ind AS 7 has not given any specific format. That's why profit after tax, you can start it plus or minus any non-cash and non-operating items, you can do it, plus or minus changes in the operating assets and operating liabilities, minus what is that, income tax payment, plus or minus any exceptional items if there are any Okay, right. And some other important points: income tax expense is always considered as operating unless until you have a specific information. No, this is because of the payment of this is a capital gain on sale of one capital asset, something like that. If you have very clear information, then it is going to be part of investing. Otherwise, it is always income tax payment will be considered as operating item, right? Cash flow from foreign currency transaction, you are supposed to convert it using the rate on the date of receipt or payment, not on the date of transaction. Date of transaction is irrelevant, right? Investment in subsidiary, associate, joint venture is obviously investing activity when it is a standalone financial statements. With respect to disclosures, yes, you have to disclose components of cash and cash equivalents, and you are supposed to give if there is a difference, when the user has to user should be able to link it. I mean the cash and cash equivalent item as per the cash flow statement and balance sheet में cash and cash equivalent item both must be same. If it is not, then you are supposed to give the reconciliation, you are supposed to provide it, right? At the same time, if there is, as I told you, non-cash items, it is material, that also has to be disclosed somewhere in the financial statements. That's all, my dear. Thank you very much. If you like the video, if you feel this will be helpful to your friends, please share it. Thank you once again and wish you the very best.